Good day. I'm Chartered, your accounting tutor. In today's video, we are going to continue solving the illustration on 3-column cash book. Mind you, I promise you that we are going to bring the most salient areas of confusion where learners find it difficult to record in the 3-column cash book. These are some of the transactions that are challenging, which with the help of the lesson, you don't have any issue to address them. And I promise you, if you're able to follow it up, there's no double entry, there's no transaction in the 3-column or cash book that you find it difficult to record, because I try to capture most of the silent features or areas that learners have issue. Let's continue. On the 20th of March 2026, Success Limited returned goods worth 5,000. Mind you, here this transaction will not be recorded in the cash book. Why? Because it is goods that are being returned, not cash. It is goods that are being returned, not cash. Therefore, the transaction should not be recorded in the cash book. Second, bank cash of 40,000. Bank cash of 40,000. Bank cash of 40,000 is a contra entry. Bank cash simply means the business have taken money, cash, to deposit into the bank. But this is what is called an entry that, if you're not careful, you might not understand that it's a contra entry. Bank cash means cash taken from the business to deposit into the bank. So in short form, you have business have bank it cash. So it's a contra entry. Let's go and see how we record it up. Bank cash on the 22nd of March 2026, we now have a contra entry. First, I always say that start with a giver account. Start with the giver side. And the giver side here is cash. Cash is given to bank, and it's a contra entry. Then you can see that on the 22nd, we have cash given to bank. Cash given to bank. Cash is the giver account given to bank. And this is contra entry, and the amount is 40,000. Mind you, I told that anytime you want to record contra entry, keep the older column in suspense. The emphasis now is cash that is given to bank, and the amount is 40,000. They now come to the debit side, and they discover that cash, bank is the receiver account. Bank is the receiver account. Then on this fateful date, you now see on the 22nd of March, bank is receiving from cash. Bank is receiving from cash the money deposited, and this contra entry, and the amount is 40,000. Then next, we now go to the next one, which we now say on the 24th of 3rd, 2026, receive cash of 50,000 after deducting a discount of 2.5% from Success Limited. Mind you, this is an area where most learners will be so confused, because most learners believe that any discount that is calculated should be over 100. But in this case, if you look at the grammar, if you look at the statement, where we now say receive cash off. Receive cash off. Understand this, receive cash off. Receive cash off here, off, there is a preposition, and it's a direct language where we are saying the business is receiving cash off 50,000, meaning the discount was removed from the amount that's supposed to be received before receiving 50,000. So here, if you go ahead and divide the discount of 100, you will get it wrong. Meaning the discount is already taken away before cash of 50,000 was received. So mind you, anytime you see a statement like receive cash off or receive check off, and if discount follow, mind you, it is clear that the discount is already taken out before the cash off so amount have been received or have been paid. So take note. So in this case, this is how you calculate the discount. Mind you, the amount that the business is supposed to receive is 100%. Any amount that the business is supposed to receive, which was the amount that discount was not given, is always 100%. Be it payment or any amount that is owned is 100%. Then we are saying that the discount have been removed out of the amount, which we know that the discount was 2.5%. So if you minus 2.5% from 100%, you are going to get 97.5%, meaning the amount which was 100% that was supposed to be received, a discount of 2.5 has been taken away out of it. Therefore, the net amount will remain 97.5%, which is that 50,000. So to calculate the discount in this case, to know the amount that was taken away before 50,000 was removed, you will now say 2.5, which is the percentage, the discount, divide by the net amount, which is 97.5 times 50,000. In this case, the discount becomes 1,282.05 kobo, which is approximately 1,282 naira. In this case, I'm not taking the kobo here because in the entries we are not be considering the kobo value. So if suddenly you now take the kobo value and start including it in the accounts, all the transaction needs to have kobo. So that's why in this case you either round up or round down so that everything will rhyme with what we have been posting. But if you have been taking kobo before, you can also take this one. That's why we're taking this amount approximately. If it's up to 5, you approximate, you round up or you round down, as in this case. So coming here, we know clear that the discount that was received was 1,282. So if you add this to the original amount, then you now have 51,282, which means it was 51,282 that was supposed to be received. Then the discount of 1,282 was taken out before receiving 50,000. Take note, I'm still emphasizing, if you see such entry that talk of cash up or paycheck off, please, this preposition is clear that this can have been deducted, so you mustn't follow the normal traditional way of saying the discount of 100, you will not get it right. So mind you, take this, because most learners are having difficulty in recording such discount. Let's go and record it. We are receiving. So on this fateful day, 24th of March, the business is receiving from sources what? How much? 50,000. And the discount is 1,282. Mind you, look at the folio. The folio here is sales ledger 1. Sales ledger 1. I told you that when we talk of folio, SL means the amount that is being received from customers, or the amount that will be received from debtors or trade receivable. Any amount received from them, initially the transaction was on credit. If you are receiving money from debtors or your customers, that is where SL is used. So this is the first sales ledger 1, and that is the right folio to be used here. I'm still emphasizing in another video, I will take time and explain folio so that you don't have any issue to follow it all, because most learners don't know how to use folio in accounting. Therefore, SL1, the discount is 1,282, and then the cash received is 50. In this case, you don't deduct because the discount has been taken away before the business received 50,000. Let's continue. Next, we now said we drew 30,000 from the bank for private use. We drew 30,000. In this case, this is drawing. Mind you, anytime you see private use or domestic use, it means drawings. Anytime the owner takes one out of the business for private use, it mustn't be private use. Sometimes you see things like we drew cash to the business to purchase private car, or to pay some school fees, or to pay personal electricity. Anything that is not of business, if it is mentioned, it is drawing. It doesn't mean that they must say private use. The private use can be anything that is personal to the owner. If the owner withdrew money to pay for it, that becomes drawing. Take note. So in this case, this becomes drawing. They will come and record it. Drawing means money is going after cash. Mind you, the principle of cash will still remain that anytime money goes after the business, you credit. Anytime money comes into the business, you debit. Now that the owner is taking money out of the business, we are going to credit our cash account. Then on the 25th of March 2026, and this drawing is being taken by check or through bank. They now say bank is given to drawing, which is general ledger 10. We now go back to follow the normal folio. It must have that serial order. The bank is given to drawing, and this is G of 10, and the amount is 30,000. Next, we have on the 26th of March, sold goods to Mr. Ondufa 10,000. This one, I already told you that this is a credit transaction, but most lenders will still be confused. That's why I told you that these are transactions that are most hidden, that most lenders will be confused. And that's why I'm here to clarify all such transactions so that lenders don't have any issue posting any transaction on the surface of the earth as far as CASHBOOK is concerned. Look at this. We now say sold goods to Mr. Ondufa 10,000. Here, cash is not mentioned, neither check is mentioned, but the name of Mr. Ondufa is mentioned. This type of transaction is a credit transaction. Credit must not be mentioned here, but the fact that the name of the person is mentioned in that transaction and cash or bank is not mentioned, simply it becomes a credit transaction. And that's why the name is telling you that we are having a deal with Mr. Ondufa, and later Mr. Ondufa want to pay us back. So anytime a name of a person is mentioned in a transaction like this and cash and bank is not mentioned, take it that it is a credit transaction. You mustn't see the word credit before you know the thing. So this one will be recorded because it's a credit transaction. Let's continue. Next, on the 27th of March 2026, sold goods by cash 10,000 and purchased goods by check worth 20,000. This is clear, but there's something I want to emphasize. It's what is called two-in-one transaction. That is, you can have up to 3 or 4 or different transactions in one day. So they can be meshed together to give you a transaction for that day. But that doesn't mean that you must separate it. You must separate it and post it in their respective area. So purchases and sales are in one day, but they have different areas of being posted as we are going to post it. Purchases will be credited while sales will be debited respectively. Let's come here. Let's start with sales. On the 27th of March 2026, sales by cash, which is General Ledger 9. Mind you, I told you that sales is already having General Ledger 9. So anytime we're talking about sales, we must use General Ledger 9. And sales by cash is 10,000. This money is coming in through sales by cash, General Ledger 9, and it's 10,000. Then on the same day, you come to purchases. Now say on the 27th of March 2026, the business purchased goods worth 20,000 by check, as you can see, and this is GL6. If you can go back, it's going to purchase 7 GL6. So anytime you're talking about purchases, you must refer to General Ledger 6, and this have been credited because money is going after the business. Let's come here quickly, where we have paid 60,000 for the bank loan received by bank transfer. You recall that at the beginning of the business, Mr. Chartered took a loan from the bank. Now Mr. Chartered is paying back the loan. So this is money going after the business. So we now go and credit cash by giving money to loan. They now come here on this fateful day. We now say on the 28th of March 2026, cash is given to loan, the bank loan that was taken. And this is General Ledger 2. You recall that loan from the beginning was having General Ledger 2. So General Ledger 2 will be because the money that is paid will now go to the same loan ledger account. So this is loan, and then the amount is being paid by transfer, and this is 60,000 credited in the cash. Finally, we have received cash from Mr. Ondufa, 9,800 in full settlement of his account. Mind you, this statement is very, very important. Full settlement. Anytime you see full settlement, it means discount is involved. What is full settlement? Full settlement means the business is either receiving or paying an amount that there's nothing left. There's nothing. If full settlement is not mentioned, even if it's for any amount, means that amount is still remaining for payment or to be received. But here they are saying full settlement means there's no settlement after this. So look at it clearly. We now say receive cash from Mr. Ondufa, 9,800 in full settlement of his account. Then you have to go back and check how much was Ondufa owing the business. If you go back, discover that Mr. Ondufa, we bought goods from Mr. Ondufa we sold goods from Mr. Ondufa worth 10,000. Now that we are receiving 9,800 from Mr. Ondufa and it's in full settlement, means Mr. Ondufa is no more owing the business. That's why they word full settlement. Then this brings discount. So anytime you see full settlement, just know that there's discount. there's discount. The full statement is announcing discount. So here you discover that if all the now was owing the business 10,000 and he's paying the business, or the business receiving 9,800 and his full settlement, it simply means that there's a discount of 200. There's a discount of 200. That is discount what allowed. That is discount allowed. Then we come here and say, on this fateful day, which is 31st of March 2026, the business is receiving from Mr. Onfa. And this is sales ledger. I told you that any transaction that have to do with goods being sold on credit and payment received from such people, that is what is called sales ledger. So this is sales ledger 2, because we already have sales ledger 1. So this is sales ledger 2. And the discount, as I explained, is 200, and the amount that was received in full was 9,800. This transaction will now be fully recorded in the 3-column CASHBOOK. If you follow up, you discover that these are some of the areas that most lenders find it difficult to post in 3-column CASHBOOK. Let's quickly balance the account up. So, in balancing, you have to determine the debit side total and the credit side total to find the difference. Mind you, I told you that to balance account is to make the two sides of the ledger account equal in total amount. So, the debit side total is having form 69,800. While the credit side total is having So, now, if you look at this, you discover that if you add the debit side carefully, you discover that the total is 469,800. If you add the total of the credit side carefully, you discover that you have 298,600. You discover that the total are not the same. As they are not the same, you have to find the difference. It is a difference that is called the balance carried down. So look at the difference. If you deduct, discover the difference is 171,200. So this is the difference. The difference is now called the balance carried down, and the difference is being recorded in the side that has the smaller amount. And the smaller side amount is the credit side. So you now take this difference and insert or record in the credit side of the card. Let's quickly go there. You come here and say, on the 31st, you always balance account at the end of a given month. So now say at the 31st of March 2026, the balance carried down in the cash is 171,200. Now you discover that if you add the total plus the carried down, you now get 469,800. Then the same amount should be taken to the debit. If you add the debit side to, you get the same amount. So in accounting, we now say this account is balanced. The credit side is balanced by introducing the carried down, and now the total of both credit and debit of the cash are the same. So we now say the account is balanced. And mind you, anywhere there's a carried down, there must be a brought down. The carried down is the credit side of the cash book, while the brought down will be the debit side of the cash book. And the brought down must go with what is called a going concern concept, whereby the business is balancing its account at the end of 31st March. Therefore, the brought forward will be on the 1st of April 26, that is the next month. Then the balance brought down will be 171 200 in the debit side after the account have been officially closed, balanced and closed. Let's quickly look at the bank balancing. So let's quickly look at this. You discover that this is the balance, the balancing of that. The total of the debit side total is having 150,000, while the credit side total is having 160,000. The difference is 10,000. If you discover that in this case, the credit side is more than the debit side. In this case, in respect of bank, we call it bank overdraft. A situation whereby the business spend money after the bank more than what the business is having in the bank account. The business is having 150 while it's spending 160. So this type of arrangement is called bank overdraft. So let's balance it up. The balance will now be taken to the debit side, not the credit side again, because I told you that the difference is always recorded in the side that's having a smaller amount. So you don't take it to the debit side. You come here and say, on the 31st of March 2026, the balance carried down in the bank is 10,000, which is an overdraft. So if you add it up, discover that the total now becomes 160. If you add the credit side, which you already add, discover that it's 160. Now say the account is now balanced. The debit side total and the credit side, they are equal. Then they are now balanced. But mind you, the balance carried down of bank is now in the debit side. And then the brought down will now come in the credit side. And it must respect the going concern concept in terms of the date. So now say 1st of April 26, the balance brought down is 10,000 in the credit side. So most lenders believe that the carry down must be in one side. No, the carry down is always recorded in the side that has a smaller amount. It can be debit or credit, but that can only occur in the bank. Like cash, there's nothing like cash overdraft. You can only spend what you have. So in respect of cash, the credit side of cash account can never be more than the debit side. There is no situation like that. You can only spend what you have. It can be equal, but the credit side of cash can never be more than the debit side. But in respect of bank, the credit side can be more than the debit side because of the issue of bank overdraft. Please don't forget to follow me up, like my video, comment, share my video, because these are the areas where most learners over time have been finding challenges to record using the 3-column CASHBOOK. Please continue watching my video, like and comment as we get more of the account, especially the foundational aspect of accounting. Thank you and chat out.